Bitcoin has dropped 6% in the last few hours. In this video, we're going to be jumping down into the most recent technical analysis for Bitcoin, taking a look at the most recent movements for BTC and what I think is likely to happen next. As I get into this video, if you find it useful and informative, hit that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, guys. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's make a start with this one. We're going to be taking a look at some smart money concepts, what you see here. We'll also be taking a look at Elliott wave theory as well. And then I'll follow up this afternoon with some of the on-chain data, what's been going on with whale movements and all that kind of stuff as well. So let's jump right down into the Elliott wave theory to start with. Okay, so we're talking about a potential move up towards the 24,218 to 24,503. Now, obviously, this is broken to the downside. We've validated this structure to the upside, but our minimum expectation was already met just over here, and it basically came in on the low of this yellow box, this slightly bigger one, at 23,996. The actual high was $24,000 flat to the penny, as Binance loves that. And we can see that we were tracking this as a potential three-wave structure to the downside, and then we moved up, and then we have this big drop to the downside. This is a five-wave structured move to the downside by the looks of it. It's a little bit hard to kind of see, but it looks like we go 1, 2, 3, 4, and we've still got some room to the downside to go. Okay, so we're not quite done just yet by the looks of it. Now, the thing with this that we need to do some sense checks on is whether or not this is actually a little bit more than just a, how do I articulate it? Just a three-wave structure. Is this in fact a diagonal structure? Because this would meet our 1.618 requirements to kind of think about a bigger impulsive trend-based structure downwards. So that's what we're going to have to check here. We're going to have to check to see whether or not we've kind of got anything major going on. I would say that we probably have a wave 1, 2, potentially 3, 4, and then 5. So what we'd want to do is we'd want to check to see whether or not this area right about here, and it bounced to this one. Yeah, so we are just short on that 1.618. So I think it's going to be a bit too far off. I mean, it's marginally, but I think it's a little bit too far off considering the value to kind of consider this a diagonal structure. I mean, what I was looking at, guys, was essentially this. We come down to here, we bounced up, we went down for 3, we came up for 4, and we come down for 5, right? A diagonal structure. Now, the only other way you can kind of do this would be under an expanding diagonal. That's the only other way that could potentially work. Let's just check to see whether or not I can visually spot an expansion. I mean, yeah, you could argue it's an expansion, but your wave 5 would normally have to be the longest. And would wave, let me just check. I want to check. I want to make sure that I get this right for you guys. Let's see. Can I get that up there? There we go. If we do that, then that is fine. That's going to pierce just there. Around the 1 point, and then, yeah, I'd say it's going to be interesting. And the reason I say this is we have essentially this move, and our wave 5 should be longer. And it's just, so you could argue that it is an expanding, just about. So you could argue that that is actually still 1, 2, 3, 4, and 5. I'll leave it up as a possibility for now. But I don't want to kind of say that categorically that is an expanding diagonal. But technically speaking, it would just about make it into that kind of category. Okay, so we'll keep it open. We'll see how things kind of play out on this side. Okay, so if that is the case and all of this is a diagonal coming down, then we would look at this potential retracement. Think about that move down, hitting that 1.618, basically converting this entire thing into a big kind of wave 1, wave 2, all of this, although not yet complete, wave 3, then up for 4, then down into wave 5. Now, this would be our starting position. As we can kind of see, this ABC structure here ended, and now we're starting to kind of flip and turn to the downside. If you start with 5, you end in 5. Okay, that's something common that we talk about all the time. It also means that we can kind of remove that one off there for now as well. We can kind of think about this maybe as either a finishing move out of a bigger C wave corrective structure or something else altogether. Okay, and we'll kind of walk our way through it over time, see how these kind of scope out. Specifically when we're on this hourly chart, right? It's really hard to kind of, do too much in advance on these micro movements. But nonetheless, we can kind of see here we are expecting further downside. But before we can go down, I would expect a bit of a move upwards first. Okay, so if I were to do this the other way around, let me just remove this fib because we know we've already met those requirements. The fourth wave expectations would be slightly higher, more towards 22,573. That's typically what you would expect to see. But I use a yellow box of a wave 4, right? Basically, a 38.2% retracement is usually what you would see, but it can go higher. It can go towards the 50%, can even go up to the 618. One of the things that it cannot do, though, is cross the wave 1, which is actually all the way up here at 86.44. Okay, so we can't really kind of go any higher than that, but typically you would expect it to be somewhere in this little box, which would be 22,570 through to about 22,750 approximately. So if I go ahead and remove that, you can kind of then see that that's kind of the expectation. And if we were to kind of come up into the highest possible range, that gives us the lowest possible potential, then we'll be talking about dropping down into the 618 to the 1.236. Basically, essentially 21,514 to 21,798. That there would then complete that structured move to the downside. And as I said, you start with 5, you end in 5. So this is either going to be a wave 1 or a wave A, essentially meaning that if it's a wave A, we come down, we go up, then we come down again later, and all that kind of good stuff. So that's the kind of Elliott wave theory kind of stuff, okay, for Bitcoin at the moment. Now, if you're unfamiliar with Elliott wave theory, check out 𝗕𝗘𝗪𝗀.com, linked in the description below. I put together a course on Elliott wave theory, so these things will make a little bit more sense to you. So do check that out. Let's jump over to the smart money concepts. Elliott wave theory plus smart money concepts work together really well. And here, there's a few things that we need to note. Obviously, we have the imbalance in the order book. That is this one here. This is essentially created from institutional grade money, big funds, smart money, okay, essentially. And basically what's happened here is a lot of selling pressure has occurred, so much so that there is no buyers or very little buying occurring inside this area. And price has basically just gone all the way through because there's no one buying or very little buying pressure to stop the price going down. This is a signal of low liquidity. There's no liquidity here, and instead price had to come down lower to find the liquidity. Okay, now when you have these gaps, price likes to go back and fill them. Okay, can take a long time to fill those gaps, can take any moments to fill those gaps. But when you have these gaps appear, they call them fair value gaps commonly. Price likes to come back up and gravitate towards it. And this is because when an institutional player comes in and realizes there's no liquidity here, okay, they can't sell their Bitcoin at a premium price up here anymore. Okay, instead the price came down here. They stop their selling and price naturally gravitates back up, and then they start their selling again. Now what happens is you end up with a stage of manipulation, usually after you find these fair value gaps, and essentially you'll find that they test the liquidity down at lower areas and try to push the price in the direction that they want it to go in to grab as much liquidity as possible. Okay, so now we've got this big gap here. Okay, expectations will be that we'll move up a little bit and then go back down. But I think we'll feel this at a later stage. This isn't an immediate reaction. Like I said, Elliott wave theory likes to kind of give us that kind of idea of what's going on. So 1, 2, kind of 3, 4, and 5. We think of this as a wave 3, as I was just saying, potentially. So 1, 2, all to 3, 4, and then potentially 5. This gap would actually get filled out at a later stage under an ABC corrective structure upwards, and we could come all the way back up there pretty comfortably and still fall within our structure. Okay, so we can kind of keep an eye on that, but essentially that's kind of where that sits. Okay, so that's the fair value gap. Let me just remove all that. So the other thing that's worth noting is that we had this change of characteristic at the top here. Okay, we spoke about this. This is a major characteristic change in the same way that this one was over this side. Okay, so we saw this major characteristic change. Now we've got a break of structure confirming that we are moving to the downside. Okay, now that is a confirmation that we are essentially going to be having to come down a lot further. Something similar would have been seen all the way down here, okay, where we can see a change of characteristic and a break of structure. And then from there, we can see that we moved up really significantly. We also got another major break of structure right here and change of characteristic here. And we can again see what happens when we see these break of structure points. Okay, now obviously we're kind of petering out at the top. In the early stages of this, you can be pretty confident in the moves that are going on. So overall, that's looking pretty positive. So let's go ahead and remove those. So all in all, yeah, that looks, I say positive is in the sense of we think the price is going down. We kind of thought that anyway. Obviously, we are now back down in the lows. Now we broke the structure. Our discount range has moved. It's chewed through all of those order blocks for the internal side, and we can no longer see those green order blocks here. Okay, on our hourly chart, we could only see sell order blocks here, premium range, and we can obviously see all of these as well. Okay, now the other thing that's worth noting is that it was only, I think, yesterday that we were talking about a weak low. Well, now we've got a new low. So this was our weak low. Now we've got a new lower low within this structure. Okay, so we broke our structure to the downside, confirming the change of characteristic, and we've got a new weak low. It's a weak low, so expect that to get broken. Ultimately, we found consolidation on the equilibrium, and we're moving down. So the expectations here are that we complete the Elliott wave theory structures. We move up, we get that fair value gap, and we complete that down by moving up, or we get rid of this gap by moving up a little bit. And this is pretty common. When you see a break of structure, you don't jump straight in, you wait for the retracement, and then you jump in at a slightly later stage. In order to break this structure now, we're going to have to move up way higher than this point here of $24,000. Yeah, it'd be $24,000. So we'd have to move up higher than $24,000 to break this structure and then get a new change of characteristic to the upside. Okay, so we're not yet to see that. So yeah, for the most part, that's kind of the expectation. Continue, unfortunately, to the downside and capture as much of that liquidity as possible on that journey. So for the most part, Bitcoin is kind of following the path quite nicely at this point. We know that everything to the upside was all corrective. We know that we're moving down also in corrective stages. You know, there's nothing terribly too alarming at this point to kind of say, look, we're going categorically down into new lower lows or anything like that. I have a hunch that that's probably where things are going because, well, I've been following the data, and the data is very clear, has been clear for months upon months, that unfortunately we are not done with the lows. So that's the expectation. Now, we do know that there's a lot of gaps further down in the price chart, specifically when we get into the weekly chart, where we know that there's fair value gaps down at $17,000. So we do know that there's a move to happen at least into those kind of ranges at some point in Bitcoin's future. In terms of fair value gaps, I think those are something that we're going to naturally kind of just go back and fill, and the same way that we do with CME gaps as well. So all in all, everything is looking pretty good in terms of where we think Bitcoin's going. And it's not to the moon. But yeah, everything else I think is just kind of following the structures quite nicely at this point. Let me know what your thoughts are down in the comments below. Do you think Bitcoin's going to recover from here? And let me know why, right? Because obviously following the data is quite clear to me, but you know, maybe you're following a trend line and maybe I'm just not that aware of it, or maybe it's an average price that you're trying to track or whatever. Let me know why you're bullish if you are, and let me know why you're bearish if you are as well. Really interested to get your thoughts and opinions down in the comments section. Other than that, guys, if you found it useful, hit the like button. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Guys, until the next one, have a fantastic day.